In the past 5 years of my trading, I've tested dozens of strategies, SMC, trend lines, indicators, and what I realized is that no matter what strategy I used, I always felt like I was missing something and I was still losing money. Then I learned one simple missing piece that allowed me to finally become profitable and help me make my first $100,000 as a trader. And it's also the exact system that allowed me to make $21,000 this month trading with only 30 minutes of trading per day. So in this video, I will break down the exact system that helps skyrocket my results and everyone in SOA to over $10,000 per month as a trader. So right now for you, trading is most likely just guesswork. You probably don't have a strategy that is 100% set that you follow every single day that's the exact same. So this is my entire goal for you in this video. So you got to watch the entire thing and don't miss any pieces and just make sure that you're taking notes down because I'm going to break down this whole system for you. This system is amazing and it's super, super simple. What I call it is the golden zone strategy. And honestly, all it does is use one simple tool. It's going to be this Fibonacci retracement tool right here. It's the third tool on your trading view. And all you have to do is just drag out and you'll see all these random numbers that pop up on the screen. Now, during this video, I'm going to show you exactly how to use this tool, exactly how to use this system, how I set it up to my custom system and everything. And honestly, I'm also going to give you just live trades at the end as well so that you can see how this trading strategy works live. So this is the Fibonacci retracement tool. If you don't know what it does, it essentially helps you understand how far we're going to retrace on a move. And this right now looks really ugly, okay? We're not going to use this. We're going to go ahead and change all the settings in a second, but just to kind of explain how it works to begin with, it's going to show us how far we're looking to pull back, right? That's what a retracement is essentially. It's just going to be a pullback down to like an equilibrium area so that we can still continue, right? Because think of it like, I think Thanos said it one time, like there has to be a balance within all things in the world, right? That essentially is how trading works. We have to have a balance in all things in the world. So what's going to happen is most likely if we're pushing up, we are going to have a retracement back down. However, there's one very specific spot, and I call it the golden zone for a reason, that we have a really, really, really good reaction to it almost every single time we touch it. It makes trading so predictable. It makes trading literally have zero guesswork within it. And honestly, it is an insanely simple system. So what we're going to do is I'm going to break down this whole thing for you right now. We're going to get rid of this. We're going to get rid of this, get rid of this. And I'm going to show you the settings. So double click the Fibonacci retracement. And what I want you to do is I want you to leave this 0.5 here, but disable pretty much everything else, okay? Disable that, just everything else. You can leave 0.618 as well. So 0.618, 0.5. Now what you're going to do is enable this one right here, and you're going to label this 0.65, okay? So you've got 618, 65, and 0.5. Now make these a bright yellow / gold looking color. All right. These two are going to be gold. 0.5 is going to be green, and also include 1. So you're going to have 0, 0.65, 0.618, 1, and 0.5. I'm going to break down exactly why in just a second. Okay. So these 5 values will be on your Fibonacci. Now you will have something that looks like this. Much more simple, right? We don't have all these numbers to worry about. It's just these numbers here. When we have these 3 values drawn right here, this area right here is considered your golden pocket, and this is another area of really, really high chance of reversal. And so what we're using this strategy for, again, is to find these reversals, know exactly where the stock is most likely going to reverse. So as you can see here, if we're on a trend, there's only 2 things that are most likely going to happen. We're either going to reverse right here and continue down, or we're going to come down, we're going to reverse right here and continue back down. So what we want to do is we want to catch this in the middle of a trend, right? No matter what happens, I want to catch this in a trend. So even if we're looking at the upside, let's say we erase all this and we're looking for upside only. Well, we're going to see this right here. We're going to come up, and what's most likely going to happen is we're going to come back down to this 61.8%, which is the golden pocket, or we're going to come back down to this 50%. No matter what, guys, this is what we're looking for. We're looking for a continuation to the same direction of trend. So once you have this strategy down, you will guaranteed most likely know exactly where the stock is going to go no matter what. It's either going to bounce here or it's going to bounce here, right? Now, let me show you how to actually draw this, because obviously you can understand theory all you want, but we need to break down how to actually do the thing. To use this Fibonacci tool, what we're going to do is we're going to find ourselves a nice looking trend. To find a trend, very, very simple. We just need to have higher lows, higher highs, lower lows, or lower highs being shown. So in this scenario, we're seeing that we have new highs, higher lows, and new highs being created, another higher low right here, right? So we can see that we're clearly in at least a lower time frame trend. We have something like this going on, right? This is where this strategy works best. If you decided to do this and you didn't have an actual trend, it's going to be very, very hard. And I have students all the time that come in and they start trying to use this strategy and they just like don't have any trend. And when it happens, I always tell them, I'm like, you have to make sure that no matter what you're doing, you have a very, very tight trend, right? It has to be something that has flow behind it that makes actual sense. It can't be any of this like sideways, choppy garbage. We need to make sure that we have smooth trend. Now, when you do have this smooth trend, what we're going to do is we are always going to find the top and bottom of our range. And so what a range looks like is essentially going to be when we have an identified and established a low and a high of our range. Or let's say we're going to the downside, it's going to be a high and a low of our range, right? So you need to have 2 points established, 1 point at the bottom, 1 point at the top. This range right here is going to allow us to find our Fibonacci. Where are we most likely to reject from, okay? Now, when we're drawing this Fibonacci, you always want to go from left to right, okay? So always start left, drag right. No matter what you're doing, if you're going upside or downside, always drag from left to right. So what we're going to do here is we are going to find the bottom of that range, which is going to be this right here. We're going to use the wick, not the body. Bottom of our range to the very top of that range. So we're going to drag all the way up to the top of that range, which is right here. And so we notice some really, really cool things happening here. Let's break that down. As soon as we come down, we make a test at the 50, and immediately we bounce off the 50. We end up failing that, which shows, hey, we've got some downside momentum. And then we end up having a massive buy wick pushing us back over the 50 one more time, right? So as you can see, this guarantees the bounce at this spot right here. We know that we're going to bounce right here. This is essentially how you use this strategy to a T. You find a range and then you just wait for the stock to come back down to that golden pocket area or to that 50% area. And this works so often it's not even funny. In fact, I'm pretty sure this worked right behind this as well. So if we go right here, we can go bottom of the range to the top of the range. And as you can see, guess what? I don't even have to, I didn't even know this was on the chart, but we come right back down. We touch the golden pocket area and we immediately shoot straight up. It's so simple that I can't even make it up. There were 2 examples right next to each other and I didn't even know, right? It comes down to just locking in on this system though and understanding that 1, you have to have a tight range, and 2, you have to have an identifiable high and low, and 3, always go from left to right. Now, it's super simple, right? But there's a lot of really, really nuanced things that we have to kind of break down on this. And I promise you, this strategy is so stupidly easy that you think you already have it, but there's so much to actually learn. So let's break down even further on this strategy and make sure that you, by the time you leave this video, it's like stupid simple for you. All right, so number 1, we're gonna keep a count in the top right corner. So I want you to have something out, write down the notes as it goes on. That way we can actually get this fully understood, okay? Number 1, you can use this on any time frame, all right? Any time frame that you want. You can go 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. It doesn't matter what time frame that you use. But the one thing that I want you to understand is that the higher time frame you have, and this works for any strategy, the higher time frame you have, the more likely that the play is to actually play out if it happens, right? So for example, we have a massive 1 hour rejection off the 50 here. This is way, way higher likely than just a random 50% area on the 5 minute or the 2 minute or the 1 minute. So the higher time frame out you go, let's say you have a daily fib. If a daily fib hits, guys, we have a very, very high chance of actually catching that reversal. Okay, so very important that you understand you can use any time frame you want. It's not going to be just the 1 minute or the 2 minute like a lot of strategies. This is going to be based on anything you want. If for some reason you're able to catch something like a daily fib, a daily golden pocket bounce, you are most likely setting yourself up for a huge move. So for those of you swing traders that are looking to actually trade using this strategy, this thing can be insanely profitable. I mean, look at how much money you make on just this one system alone. You actually take SPY from 447 to 541, so almost a $100 move off of this fib. Now, this fib setup is not going to happen as often on the 1 day as it is going to happen on the 1 minute. And that's the reason why it's so accurate when you go higher time frame, right? Because when you go higher time frame, you have a lot less, but those setups are a lot more accurate. All right, number 2, not every fib setup is going to last. And so what I mean by this is not every single setup is going to work, right? Sometimes you're going to have something like this. And the reason why I want you guys to focus on what I'm about to tell you is because it is so easy to miss this, but you're going to lock in with me and this is really going to work, okay? Focus on reaction at your golden pocket area, all right? I'm going to say that one more time. Focus on reaction at your golden pocket area. Do not enter a position just because you touched a golden pocket, right? We want to enter a position based on price action going our way at the golden pocket and doing a very, very important C word, confirming our position into the direction of trend, okay? So no matter what, guys, the first thing is I always want to make sure that we are having a confirmation. So as you can see here, we come down to this golden pocket area. Do we have a confirmation that this is going to bounce at this point? No, not even in the slightest, right? So there's no reason that we're going to just take a position to the upside because we don't have any actual confirmation. I don't want you to get trigger happy and take a position every single time you see a fib because you're like, well, Sean told me to do that. No, right? I want you to focus on reactions at your level. So if you see a massive candle that has a massive candle body flying straight through the golden pocket, do not take this position, okay? And the easiest way to really get an understanding of reactions is understanding this right here. So we have our candle P and our candle M. And so what that means is candle pressure, candle momentum, all right? As you guys know, there's 2 parts of a candle. You've got your wick and you've got your body. When you are looking at these 2 parts of a candle, you can tell exactly where the pressure is and you can tell exactly where the momentum is. So if we see a large candle body, we see a ton of momentum pushing to the downside. Whereas if we see a large wick, this shows that we have a lot of pressure being given by somebody. So for example, this here, this pressure that's coming off of this, we didn't really touch the golden pocket here, but let's say we touched the golden pocket here. There's a lot of pressure, meaning that buyers have bought all of this up. That means that buyers are showing a lot of strength. But when we see a large candle body like this, this is showing that we have a lot of momentum. And so momentum is pretty high priority, right? If you see a massive move, we're probably not going to assume that this thing is going to continue going to the upside, right? Focus on that candle momentum and candle pressure when we're coming towards a level. Then you can start to make a move based on that. And in this video later on as well, I'm going to show you exactly where to enter and where to exit on every single setup. But I want you to have these things down first because I think that they're just more important. And honestly, if you're watching this and you're thinking about skipping, if you skip, you're stupid, right? Like, we don't skip through this because obviously every single piece of this is so important and it's so simple too. All right, number 3. Here is exactly why trend is so important. Trend is literally your best friend in these scenarios. In this, I think there's maybe like 7 or 8 fibs we can draw, right? We can draw something like this. We can draw something like this. We just have infinite amounts of fibs. There's just no way you can have any type of trade within this. I mean, it doesn't line up, right? Look how much stuff we see here. There's nowhere that we can see very, very clear trend, right? So when we are taking fibs, we want to really make sure we're keeping it clean to like a full trend and just seeing, all right, golden pocket here, golden pocket here, and we can just keep riding the trend as time goes on. I really don't want to see you guys, just going in on this and going, I got to get a fib somewhere and just typing fibs in everywhere, right? I have a lot of mentorship students and all these mentorship students do the same thing. They come in and they're like, I'm trigger happy. I want to go straight to finding as many fibs as humanly possible on your chart. Don't, right? Be patient, be a stalker. Literally, like, watch this chart and wait for trend to establish itself. Then we can see a nice move, because as you see here, there's no entries. There's no entries, right? There's nothing on this chart. All right, so now that we got those important things out of the way, I want to make sure that you guys actually know how to enter these positions, where to put your entry, where to put your stop loss, and pretty much exactly how to trade using this system from start to finish. Okay, so first things first, guys, we want to make sure we have trend. As you can see, like I've said before, we have ourselves a nice little, higher high, higher low, higher high, higher low being created. So very simple, right? Now, one thing we want to pay attention to is, where is the pressure? Where is the momentum? Like I told you guys earlier. And so when we come down to this 50% here, we see that we actually have pressure towards the buyers, right? The buyers are holding this 50% here. This shows that we're most likely going to continue to the upside, because as we have this trend, well, one thing, trend is always probably going to continue, right? Like, there's such a strong chance that trend continues in the favor that we are already going in. So that's one thing. Now, the second thing we know is that when we come back down and we retest this 50, if we show that we have enough pressure to really break to the upside, then we can see a very, very nice move. Now, to enter a Fibonacci position, what I would always do is wait for wicks to be broken and candle momentum to push high, right? So what I mean by that is, if we see this trend right here pushing off the 50%, we need to wait for candle wicks to be broken. So as you can see here, this wick doesn't get broken, this wick does, and we see a nice move continuing. So we need to see this candle engulfing that last wick, showing that it has a lot more momentum than pressure. That can give us an entry right here, and we can take our target all the way up to God knows where on this position, literally all the way over here, probably up to that order block right there, which, if you guys know my order block strategy, congratulations, right? You're ahead of the curve. If you don't know my order block strategy, time to do some research. You can go through the rest of my channel. So where am I placing stop losses on a golden pocket or 50% position, right? Anything to do with fibs. If you are taking the position based on the 50%, we need to find a point of invalidation for this position. So at what point on this chart does this position become invalid? Well, in my opinion, right, if we were to break below this 50%, I would probably start to feel like, okay, this is definitely not going to continue going my way. And if we break below this low right here and we actually start to engulf those lows, then definitely I feel a lot more stressed about this position. So that's probably the route that I would go. I would always set stops on the other side of the 50%. Now, let's say you entered way, way earlier off this. You can just have a stupidly tight stop loss. This is how you start to get like 15R, 17R, like 17 risk to reward trades, which are literally insane, right? You can have a tight stop loss below the 50, tight entry right here, and you can just have a nasty risk to reward ratio of 18.31 to 1, right? So this becomes just a huge trade if you just get really tight on your stop loss and entry. Now, I'm not recommending that, because I also have a lot of mentorship students that try this too, where they have this tiny little stop loss and it doesn't allow your trade to work, right? It doesn't allow your trade to actually have any room to start like doing anything. So we need to give some space for drawdown as well. I always make sure stop loss goes on the other side of the level that I'm entering on. So for example, let's say that this were to bounce off the 61.8 instead of the 50%. Well, very simple, right? My stop loss goes on the other side of the 61.8. It's like really, really stupidly easy to understand. And that's the reason why I teach it, right? That's the reason why I do this, is because it's so simple. Okay, so we want to make sure that our stop loss is on the other side of that level. Sometimes you are going to run into situations where price just absolutely blasts through, like I showed you earlier. And one of my favorite things to do is take the move if we're able to retest this 50% and continue straight down. Like, this is a really, really good example of that. This is actually a trade I took for my mentorship students. If you're interested in the mentorship, it's one-on-one, breaks down literally every single piece of my strategy, my system, everything, breaks it all down for you one-on-one. If you're interested, first link in the description, just go click it, apply. If you get accepted, I can't wait to work with you. But This right here is exactly what I'm talking about. We have a massive breakthrough of that 61.8%, the huge golden pocket break, right? And then we have an immediate retest and a continuation. Remember, like I said, if we get that engulfing candle that has a lot of momentum pushing over that last candle, I'm 100% in. So this position ended up going for what, 60%? Yeah, 62% on this position. And it's all just based on following this system of put your golden pocket on your chart, wait for price to just get towards that area. Once price does that, find the reaction and take it live. Here's a live example of that working. I'm going to just live example, go. Now we're seeing a little bit more of an A+ setup here in the golden pocket, right? So we have that golden pocket move. We know that we're in a massive downtrend. So all we have to do is wait till we can continue to come through and break through that golden pocket again and show strength to the downside. If we have strength to the downside there, you know, boom, 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 we take the position to the downside. This should just rock all the way down to the next SOA level, right? Very, very convenient position for us. All right, I'm in QQQ 519 puts for 529. Just have to show that we have enough strength here. We just need to see lows get broken on pretty much every time frame. That's it. That's all we need to see. All right, I am in QQQ 518 puts. Hopefully this one is not a mistake, and we just end up rocking straight down. That would be really, really ideal. Obviously, if this does lose, I'll just accept the loss for the day, and I'll call it. But we'll see if that happens. We'll just see if we can get a nice continuation here. That's the ideal scenarios. We get a nice continuation. These contracts are absolutely juiced. I am very deep green at the moment. I'm taking my main trim here at 100%. I just cut off 50% of the position. Let's go, baby. I think that this just continues, right? This is a perfect use of fibs, perfect use of SOA levels, perfect use of literally everything. This is just picture perfect. So I'm happy with this trade. I'm going to cut off a majority of it right now, quite literally. So with that being said, I'm cutting off pretty much everything. I'm gonna let the rest of this trade go, 20% of this trade. Just runners are gonna run, either hit break even or hit a full target. But this was amazing. I have nothing to say about this. You've learned everything you need to know about Fibonacci, but you have to kind of use this in tandem with other strategies because it's not always going to be perfect on its own. So right here, it's going to be popping up on the screen right now, is a whole strategy video that is literally one of my main top strategies, which is going to be the order block strategy. You combine it with the Fibonacci and it makes just an amazing, like really, 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 really good strategy that has over an 80% win rate. So go click that video, watch that whole thing, and then just piece these two together and you're going to see just some insane results. I hope you have a good one. Peace. I'll see you next week. Bye.